Welcome back to another Monthly Themes episode brought to you by Convergent Wealth Partners. I will be going over global equity returns, and then I'll throw it over to Max, where he'll report on GDP, inflation, and employment. Enjoy. Despite August historically being a tough month for equities, U.S. equities posted yet another positive month and new all-time highs in August. Let's first look at the S&P. The S&P finished the month up 2.9%. Looking at the NASDAQ 100 led the pack at just over 4%, and the Dow has been lagging the S&P and the NASDAQ, but still posted yet another positive month. Small caps continue to be range-bound since their high in mid-March, even though a positive month. Commodities also seem to cool off this month after a 30+% run so far this year. Investors are trying to price in how long this level of inflation will stay with us. And lastly, looking at the 10-year yield, it has stayed range-bound between 1.35 and 1.2%, largely due to the lack of clarity on Fed policy and some mixed economic data. Now over to Max.
We will now move to the economic data portion, beginning with total claims. Total unemployment insurance claims fell further in August to just over 12 million as the economy continues to recover from the initial pandemic spike. However, this level of claims remains well above pre-pandemic levels. August jobs report came in much worse than expectations as consumers fear another wave of COVID lockdowns may be on the cusp. Non-farm payrolls increased by just 235,000, far off of the 720,000 experts expected. On a positive note, the unemployment rate came down slightly to 5.2% from 5.4% in the prior month. Overall, this was a very worrying report and presents some concerns for what may lie ahead if additional lockdown measures do come in place. Coming off of the pandemic lows, US GDP surged higher on a year-over-year basis in Q2 to 12.18%. This massive spike in GDP provided support for the market, with nearly every industry experiencing deep Quad 2 growth. While research from Hedgeye and Bloomberg does suggest a slowdown in the coming quarters, we are still expecting to see GDP remain elevated above pre-pandemic data for the next year and beyond. Additionally, year-over-year CPI participated in similar growth and jumped to 4.85%. Despite the Federal Reserve's label of transitory, our third-party research expects the inflation to stick for the next 2 to 3 quarters. US pending home sales came in at negative 1.77%, significantly below expectations of 0.4%. Coming out of the pandemic, the real estate market recovered much quicker than a lot of other industries. And so as a result, it's now starting to see some slowing, while those industries that were a little bit slower coming out of the pandemic are now seeing growth. Another concerning data point has been the crashing consumer sentiment, which fell to a 10-year low of 70.3 in August. With COVID beginning to cause renewed shutdowns and increasing concern over the situation overseas, fear has once again returned to the consumers. The major takeaway here is that while consumer sentiment is now lower than it ever was during the March of 2020 crash, the market is roaring to all-time highs. So as a result, there is that possibility that we could see the disconnect begin to correct, which would lead to major losses in the markets. So in summary, the market roiled higher in the month of August, with big cap tech regaining its spot in the leadership role. However, many concerns do persist, with lots of the economic tailwinds likely to flip to headwinds in the coming months, political instability overseas, and the possible resurgence of COVID lockdowns. So while market participants have enjoyed this really strong bull run over the last 1.5 years, there are a lot of concerns out there. For that reason, we have shifted our convergent investment philosophy to an all-weather approach that is designed to perform well in any market condition. We hope you've enjoyed getting this deeper look into our investment research and look forward to providing it to you each quarter moving forward. Thank you from the entire Convergent team.